Welcome back. Let's take a look at how the markets have performed then. It certainly was an interesting one earlier on this morning, particularly out in Asia. Yes, fears of more coronavirus cases certainly impacting the market, but it was a bit of a mixed one because we're getting word then even out of the United States that many more are hoping that they'll work overnight and tirelessly then. That's representatives in the House then in the United States and lawmakers there saying that they will work around the clock in order to try and get a deal done for the United States and that stimulus effort there. But Treasury Secretary Steven Mnuchin saying that they're not looking at $3.4 trillion US dollars, which is what the Democrats in the United States have certainly wanted for some time. Doesn't look like we're headed in that direction, though. But overall, there was a sense of positivity, though, even if it was a bit of a mixed bag initially in that choppy trading picture. 0.2% higher than for the Shanghai Composite. But the Nikkei did manage to close in the red, unfortunately. So not necessarily a good trading day there. The FTSE 100 is up 1%, with the DAX in Germany also doing very well. 0.8% up for the CAC 40. So some positivity filtering through onto those markets. Then perhaps more stimulus coming to the fore could certainly be an element of discussion there too. Overall, though, for the local index, more than 2% higher today. So big news there, of course, and we'll touch on exactly what is sort of shifting markets along. But I want to highlight the gold index there, going up 6 1/3% today. So some good numbers for those gold companies. Clearly, all that glitters is gold at the moment, and that's pushed up the resources counter, which has gone up 3.6% thus far. Only marginal gains, though, for financials, with the banking counters also following suit. As I made note of that gold index, it is the big news story. $2,039 a fine ounce then is the price of gold right now, surpassing that psychological $2,000 a fine ounce mark. We called it, of course, saying that it's only a matter of time, rather when and not if it would happen at this time. And as you can tell, there's certainly happening a big 1% gain as well in that gold price, which has dragged the platinum price with it, which is up 1.9% there. 2.75% high for Brent crude, above $45 a barrel there, as more demand seems to be coming back into the market as well. So perhaps helping that price along. Very quickly, though, some strength coming through for the local exchange, but still firmly above that 17 Rand mark against the US dollar. 7.24, in fact, at present. 20.43 for a euro. The pound sterling, 22 Rand, 63 cents. Michael Traherne joining us now as well. He's from Vestac Asset Management. Michael, thank you so much for the time. Nothing else matters. Gold has gone above $2,000 a fine ounce. Unsurprising, I suppose, right?
Yeah, the unfortunate blast in Beirut last night was what seemed to push it above that $2,000 mark. Still uncertainty around the cause of the blast, but the market's not taking any chance in flying to risk-averse assets. And gold is top of the list, and so crossing 2,000 for the first time ever. It probably is worth noting that gold was just below $2,000 an ounce in 2011. So effectively, we've only just crossed that mark. It's been 9 years of sideways growth for gold holders.
What does that mean then for even the gold indices? I mean, do they just continue to stay at these prices for a lot longer? Is there hope for that industry? We've continued to call it a sunset industry here in South Africa, but globally it seems to continue to find itself growing and growing more.
Goldfields had a trading statement out this morning, and they said that their profits are going to double from last year. And if you look at headline profits, which is where they remove once-off numbers, they expect profits to be up 4 times. And it points to gold miners being what they would call a leverage play on the gold price. So when the gold price goes up slightly, these companies make a lot bigger profits. Unfortunately, the converse is true as well, that when the gold price goes down, they make a lot less profits. So hopefully during these times of super profits, they're reinvesting in themselves, paying down debt, and sharing the wealth, I suppose, so to speak.
Yeah. All right. Well, we'll certainly get interesting because then we also have the discussion around more stimulus efforts out of the United States and perhaps trying to get a plan together by Friday. If that comes through, what does that do for the market? I mean, not so long ago, we saw even the dollar index go down to a 2-year low. It has recovered somewhat. Would this weaken it any further if they were to get that stimulus plan pushed into the market? It would be the second one, if I'm not mistaken, at this time.
I think the worry is if they don't get that stimulus package done sooner rather than later, markets are relying on the stimulus to keep the U.S. economy going. If you've got that money going through the economy, it means that companies don't have to lay off staff. It means people have money for rent, that sort of thing. And all of the spending in the economy is what drives company profits. It is worth noting that because of all the stimulus that's been pumped into the global economy, interest rates are effectively zero around the world and in negative territory for parts of Europe and in Japan. So the downside of the stimulus is that it pushes interest rates down. The upside is that there is stimulus and it gives support to the economies, and we're going to need it until we completely out of a global lockdown. So, yeah, from a financial markets perspective, it's more about let's hope we get it instead of let's see what happens if we don't.
Will certainly get interesting from that point of view. All right, on the local front, we also got some earnings out, the likes of Liberty. We're going to chat to the CEO, David Monroe, a little bit later on. But what do you make of the company? I mean, they put aside 3 billion rand, if I'm not mistaken, as well, in the hopes of trying to do as much as possible with regards to COVID-19. However, that's a big loss. 2.2 billion is still a big hit for the company, which hasn't necessarily been doing too well. It hasn't shot the lights out over the last couple of years either.
It's so it's money that they put aside. If it's not money that they've spent yet, so the loss is what you would call an acting. So noting that if they don't have to spend the 2 billion that they set aside, that money can actually come profit. But more importantly, these insurers, they make money when the JSE does well. That's how the business model works. And the JSE has just struggled for the last 5 years. And as a result, these companies struggle. And now they're at the forefront of a global pandemic. It is worth noting that they said they haven't seen too many claims related to COVID, but they did see them start to pick up at the end of their reporting, which was the end of June. So probably more interesting to see what their numbers are in 6 months' time to see exactly how they weathered the storm.
We'll get interesting from that point and see how things fare as well. Thank you so much then, Michael. Appreciate it. Always good chatting to you then. Michael Traherne there from Vestac Asset Management, helping us unpack the market picture just a little bit more there too.